We shouldn't forget that there's 1.2 million barrels additional cuts in May and June coming from Saudi Arabia, UAE, and Kuwait right now, which is keeping the market tight, which will also return. But indeed, I think these cuts are going to be agreed, and it will help to keep the market tight into July. But then there's still going to be this huge uncertainty around how they then start to unwind things beyond July. So it's still, a lot of uncertainty down the back of the year as how this will unfold.
Does it look to you, Chris, that demand is coming back maybe faster than OPEC or others expected? You look at Apple mobility data, the TomTom index. We've been showing these to our viewers since March. Things people never heard of, now they look at every day. Demand and driving in the United States has come back a lot faster than people thought.
Yeah, that's absolutely it. We have 4 million barrels a day of oil demand growth per month for May, June, July, and August as we go through the summer months. Everybody is jumping in their cars. They're not jumping in public transport. They're not getting in planes. So it is just the gasoline part that is growing and rebounding in what is a V-shaped recovery, unlike more of an L shape for jet. So it's one sector, but indeed that will grow fast. But when we get to September,
Chris, hold on, let's dive into that. That's what you just said is bullish for gasoline, because you think about the fact that when you look at the mobility data, as we have and showed our viewers every week, if you're not on a subway or a bus in New York or Boston or Atlanta, wherever it is, or London, you're probably going to get in a car when you have to go back to work. Used car sales, we're hearing they're booming because people say, I don't want to be around others. I'm going to buy a car. I know the climate activists are going to say, oh my God, worst possible scenario. But the reality is people are going to want to commute alone and safely. You could see an environment where gasoline demand soars down the road.
Absolutely. I mean, the trend is indeed people buying those secondhand cars. They're going to social isolate. Distancing is going to continue. We're going to live in our bubble of cars. We're going to live in a world where we have all our stuff delivered and not go to shops. So you're going to have all those delivery vans also driving, which does stimulate a bit of the diesel demand as well around those deliveries. So we are going to see a long-term effect, and some of it in the short term is positive for oil demand, and that gasoline demand is soaring, as you say, over the coming months. The mobility data shows everybody getting those cars. People are going to want to visit family. They're not going to jump in a plane. They're going to take that road trip to go and visit family over the summer. So I think there is some response. Now, what I would caution, though, that demand growth that we're talking about is only balancing with what the supply cuts have done. And so when we look at the third quarter, we do still see the balance as being precarious. We have supply and demand roughly balanced together. So any creep of non-compliance from the OPEC producers could mean that we have too much oil. These higher oil prices we're seeing right now, just creeping above $40 as people get a little bit more bullish, is bringing more US shale back. Those producers who cut and committed to cuts are showing a little less compliance now. We see more oil coming on from the shale producers. They're getting excited. And that's the balance that OPEC need to make. How high do they allow oil prices to go without triggering a response from the shale producers to suddenly increase production? So that's the balance. Again, it's also a key factor that Saudi Arabia and Russia are thinking about when they think about how much production to cut and when to bring new production on.
Want to look at crude oil as well. It is trading up over 4% WTI at this moment. And one of the things we want to focus on is the upcoming OPEC meeting that we believe is taking place this weekend. To help us understand the implications for the oil market, we're joined now by Regina Mayer. She is KPMG Global Head of Energy. Good to have you here.
Thanks for having me.
So what are the dangers with this OPEC meeting? Do they stick to the production cuts? Do they increase output? What should we focus on, and what might they do?
I'm expecting that they will stick to the existing production cuts of 9.7 million barrels and that they'll extend those through July. A couple of reasons why I'm pretty confident that that's the outcome for tomorrow's meeting. Number one, they didn't meet yesterday. They had to defer to Saturday. Number two, they've had really a lack of discipline around achieving the cuts. So only 74% compliance. for the OPEC cartel has been in place. The big bad actor has been Iraq. They have achieved less than 40% of compliance. So the machinations within the OPEC activity was around getting Iraq to comply and agree to come to the table. I believe from the signals that they've sent that that's what's happened and that's what will happen tomorrow. And I think OPEC has learned that they don't want to surprise the market. What we saw on March 9th when WTI and Brent totally fell apart because they had a last minute disagreement and walked away was very unsettling for the markets. I believe they've learned their lesson and they've signaled to the market, and we'll see an extension of the cuts through the end of July.
And so therefore, Regina, it's Julie here. Hey, therefore, are we going to see sort of a floor under oil at this point as a result of that coordination, if you will? I mean, because we still have heard the refrain that OPEC is just not as important to the oil markets as it used to be. Given that, what does this do? Well,
I think their importance is still there. I wouldn't say that they're not important. And I think that they've demonstrated they have the ability to definitely crater prices and the ability to somewhat ease them back when they have compliance in place. So, I think the key for them is going to be watching what the shale producers do and to maintain this fragile alliance that they've created between Russia and the Saudis in particular to try to drive more normalcy in the market. I wouldn't say we're necessarily at a floor yet, though, Julie, because we're watching what the shale producers will do. And there are already two of them that have signaled that they're going to increase production. I'm less worried about that, though I know OPEC will be watching it. But Q2 performance across the board will be dire. And that will put a curb on U.S. production, as well as rig counts that are still down 67% since the pandemic started. So there's so many factors that come into play. Demand is increasing. That's making everyone more confident. Supply curbs have been put into place. And I don't see a race to the bottom like what we saw in March, because everyone is wearing a whole lot of scars from that activity.
Regina, let's talk about that demand then. No question, we have seen a pickup when you consider the last 2.5 months or so. Demand has basically been, the economy has basically been shut down. How significantly has that needle moved, though, as we've seen these economies reopen? When you look at the overall balance in the market, where does demand, how much of a ramp up have we actually seen?
Well, I think what we're seeing in the price is a little bit more optimism around demand than has actually translated into the results, because we still have a 10% overhang of crude over the 5-year average. We still have a 10% overhang of gasoline. So we're not we're not in a position of having inventory draws yet overall, but we're seeing activity, we're seeing movement. People are on the streets. I live in Texas, and we're driving around, we're taking road trips, we're going out to eat at restaurants. And I think that's emboldening people. And then I think this is what surprised me, is air travel. And we're seeing that start to bump up pretty significantly, with airlines saying they're going to increase flights by 50 to 70%. And that, I think, is making folks more encouraged about overall demand patterns.
All right, Regina Mayer is KPMG Global Head of Energy. Thank you for joining us.